had to hop off because I thought my client was here, but I guess not. But we're gonna run this back. Let me wait for everybody to get back in the room. Let me wait for everybody to get back in the room. Hello, hello, everyone. Is 2026 a good year to buy? This is gonna be a really try to make it buy it. 2020. Sorry, I had a message. Hello, hello, hello. Hello, everyone. Those of you coming in. Life, I tell you, the thing about being a realtor is we are just we're always setting out fires. We're always putting out fires here and there. Things are just always happening, and it is a nonstop, um, nonstop. Okay, but while we're here, is 2026 a good time to buy? All right, so that's the topic for today, and I'm going to get into that because I want to make sure that I get a lot of the fears that I'm getting from people out of their head, you know? I want to make sure I get a lot of the fears that I'm getting from people out of their head. And everybody is nervous, and I get it. I understand. But we're just going to get into it today. And it's going to be really quick. Like I said, it's a quick chat. I'm not going to hold you for long, but welcome back to my channel. If you are, a loyal subscriber here and you've been here, welcome. If you're watching the live, welcome, welcome. Those of you coming in, if you're on replay, thank you for being here. Don't forget to like and subscribe. Share this live with somebody who you think will be interested in this conversation. If you're coming back, the live went off, but we are back. We are back. We are back in action. Again, thank you. But today I'm going to talk about a question that a lot of people are asking me. I get this a lot. I get this a lot. And it seems like I get this every year. Every year I get the same question. Evelyn, is 2026 an actual good year to buy? I got that last year. I am getting it as the year is about to close. Can you believe it? We are almost at the end of the year. It's like we slept, we woke up, and now it's Happy New Year. Like we are really about to hit the new year, and it's amazing how time flies. Time waits for nobody. So let me tell you this before I get into this market update. Let me give you my rant, okay? I'm gonna give you my motivational rant. And if you don't know who I am, thank you for subscribing. Thank you for being here. My name is Evelyn Williams. I am a licensed realtor here in the Metro Atlanta area. But let me give you this rant about time waits for nobody. I need you guys to make sure that you have your actions and your goals planned, okay? I need you to make sure that you have everything that you want to accomplish for the next year. Why? Like I just said before, time waits for nobody. The year goes by so quickly, so quickly. We can blink and now it's going to be another year. And if we have not set goals, if we have not set plans and things that we want to do in the next year, we're just going to go by every single year not accomplishing anything. And that is not a way to live. Our life is made for us to do things and accomplish abundance in this world. We are not made to be stagnant. We are not made to not do anything. We're not made to not go after our goals. We are not made to just sit and let the world just pass us by, because it's going to pass. and it's going to pass by fast. And we do not need to be in a space where we wake up every single day and not know what happened to yesterday and we don't have a plan. So I need us to make sure that we have a goal, that we set our goal, and that we take the action to accomplish the goals that we set for ourselves, okay? Because I don't need to hear you guys say, oh, where did the time go? I didn't get to do anything. But the first thing I'm gonna ask, did you plan? Did you plan anything? If you didn't plan anything, then what is it? You know, so I wanted to get that. All right. The year is about to end and I need you guys to have a plan. But let's get it back into this market because this page is about real estate. My other page, I will get down to the nitty gritty of that topic with you. That is more of a, you know, motivational behind the scenes page, and that's Evelyn T. Williams. Page. This is all about real estate. This is just about real estate. So we're gonna get into the real estate. Drop it in the chat where you are coming from, where you're tuning in from. Drop it in the chat where you're tuning in from. Hello, hello, hello. Drop it in the chat where you're tuning in from. Okay, I want to know so I can know where most of you are watching from. Okay, but we're gonna go back to what I was saying. So a lot of people ask a question about, is it a good time to buy? Is 2026 a good time to buy? And I was saying that every year I get that same question, you know, because people are fearful because they hear where the market is right now, the interest rates and everything else. So we have New York, okay. We have, all right, so we have New York. We have New York, okay. All right. But I'm going to break down what people are afraid of and how the market really works. So, the relationship between interest rates and home prices and who 2026 is for. So, we have North Carolina, we have DC, all right. We have DMV. I'm originally from DMV too before I moved to Georgia. Lived in Maryland, PG County to be exact, okay? But if you're thinking about buying, investing or moving up in the next year, just make sure you you know, stay tuned and get all of the information that you need. We have Cali. Hello, hello from Cali. Hello from Cali. All right. So the fears that I get from a lot of people are prices. Will prices crash after they buy? I'm in the Metro Atlanta area. I'm a licensed realtor. For those of you who do not know, my name is Evelyn Williams. I'm a licensed realtor here in the metropolitan Atlanta area. I'm licensed in Georgia, so I am in the state of Georgia. But will prices crash after they buy? Because they hear a lot of fears right now about interest rates and things like that. So they fear. And also they fear the rates. The rates are too high. Will I be overpaying for the home? Should I wait for the perfect time? Will I be stuck if the market changes? I get a lot of that. And what I'm seeing is fear driven by headlines and not necessarily facts. Because the thing is, every market is different. Okay. It's not based on nationwide crisis. Every market is different. Some markets are thriving right now, and other markets are cooling down a bit. So, headlines should not drive your decision making. It should not drive what you are planning for yourself and your decision to purchase or invest in a home. So, you should really take the consideration with your financial readiness. A lot of people are waiting for the perfect market, but historically, that moment doesn't exist. Like markets shift, things go left and right and then come back left again. And, you know, what we've been seeing is technically we've seen this before. The market is a cycle. The market is a cycle and it goes round. We get highs, we get lows, and, you know, we just happen to see the medium right now and we're fearful, but not before this day, there used to be rates that are way higher than this. So some people have seen this before and even worse, okay? So the thing I want to emphasize is most people regret waiting too long to purchase because they didn't have a strategic plan in place when they were doing their research and when they got into the market. They did not have a strategic plan. They were sitting on the sideline, they were waiting, and they did not have a plan, and that can be a problem. Okay, so let me explain. Markets move in cycles. Like I said before, you have growth cycle, you have slow down cycle, you have stabilization cycle, and then it goes back to growth. So it's a revolving cycle. Okay, it's a revolving cycle. So we need to be aware about the cycle that we're in, and we need to understand that it's going to get better. It's going to get better. We should not be fearful. When you do get into your home, you already know that 9 times out of 10 that's yours, and you do not have to, worry about anything else. Because especially if you're renting somebody else's property that they own. You're paying off. I know it's a cliche thing to say now, but you're paying off somebody's mortgage. It is. It's true. You can be paying towards your equity. You can be paying towards your generational wealth. You can be paying towards your asset instead of paying towards somebody else's. So when you have your own, it is yours. Okay, it is yours. You know you have ownership. You know you have that asset, and you can do as much as you can with that asset. So you can be the landlord. You have a landlord now if you're renting. You can be the landlord later on if you decide to move away from that home as well. So real estate is a long-term, not a short-term goal. Buying does, during uncertainty often creates opportunity. So when people who tend to benefit the most from, I'm sorry, I'm getting a message. My client is almost here. People who tend to benefit the most are people who are strategically ready. People who have the right guidance, who are ready, and who've prepared themselves financially and also mentally for the market. Okay, everybody is nervous. I get it, but not everyone, is prepared. And that's the problem sometimes. Sometimes we have to be prepared for the market. We have to have an advisor who can advise us in the right way about getting into the market and knowing when to purchase and knowing the right time to purchase, the right place, location, and is our finances in order? Is the our background in order? Do we have enough assets? Is the credit? I always say the 3 pillars: credit, asset, and what's the next one? Credit, asset. Oof, my brain is on blank. Credit and asset. Let's do credit. What are your credit looking like right now? Okay, what does your credit look like? Are you in a space with your credit right now in order to qualify for the home? Asset. What do you have to pay for this home? What do you have to pay for this home? Do you have money saved? Are you financially ready? What do you have to pay for this home? If you don't have anything, there are things in the state of Georgia that can help you. We have down payment assistance. We have other strategic plans that we can put in place to see where we can get the money from and things of that nature. So we will want to know, what do you have in order to get into that home, okay? But also, I want to make sure that you understand that we just need to last one, income. We need to make sure that our income is stable, okay? Are we in our jobs for 2 years? Do we have proof that we've been working? Do we have the W-2s? Do we have 1099s if we are entrepreneurs? Is our job going to sustain us while we have this home? If not, then we need to discuss it. Things like that, the lenders look at because they want to make sure that you guys are ready. And when you get into the home, one second. Okay, I will be here until then, but then I will have to leave no later than 3 o'clock because I have to get into my next appointment. When we get into the home, we are able to pay for the home. One second, guys. All right. What state? What am I missing? I am in Georgia. My apologies, guys. I'm in the office. I'm waiting for a meeting to walk in, and she's looking for a home. So we're meeting at the office to kind of discuss and strategize and see what she needs. And she's running a little late, so decided to get on live and chit chat with you guys while I wait. So I'm in Georgia. I'm in the state of Georgia. So back to what I was saying, we have to make sure our three pillars are strong. That's our credit, our income, our assets. Okay. So before you get into a home, before you buy any home, this is for the first time buyers or people who already bought homes, but they're looking to sell and get into their home. We have to make sure we have those pillars in place. Those are the strongest pillars that you can have when you are going to speak to a lender and you are interested in buying a home. This is for the people that are in the States. I'm not sure what the process is for international. That's a whole nother topic, but I'm speaking about the state of Georgia and sometimes the nation, the United States of America, just the United States of America. I don't know the process anywhere else. But we have to make sure the three pillars are strong. Our income, our assets, our credit. Credit, you have to make sure that you are at least qualified, you're in within the range of what the loan product is looking for. If it's FHA, are you 580? Sometimes it's going lower than 580 right now. So but the strongest you need to be is at a 620. Okay, I can say your foot through the door, unapologetically. Um, Credit, okay? You have to make sure this is for buying a traditional personal home, okay? Investors is a whole nother story. You can, there is DSR loans. There are loans that are just based on what the income, what the property is netting and things of that nature. But we are talking about the everyday person who needs to buy a home that they are living in, not investing. We're talking about the person who are the people who are buying their home to live in. Okay, so credit, yes, credit. Make sure your credit is in place. All right, you have a strong enough credit, and if you don't, then you have a lot of cash reserves to put down because lenders will want to know that if they're going to work with you below a certain rate, below a certain number. Next, you will need to make sure that you have the assets. Do you have the money for the down payment of the purchase? All right. Do you have cash in your savings? Do you have, if you're a W-2 worker, you have a 401k? Do you have a gift from your family that they have written and said that it's a gift and not a loan and you don't have to pay it back? Do you have those things? Do you have down payment assistance? Do you have what's needed for you to secure this home? Do you have the asset to secure this home? So you got to make sure that's in place as well. Next, income. Are you do you have a stable income? Meaning if you are a W-2 worker, How long have you been at that job? Has it been 2 years? Has it been 1 year? How long have you been at the job? If you're a 1099, if you're entrepreneur, if you have other ways of getting, do you have bank statements and profit and loss statements to provide to the lender in order for them to see how often are you getting paid? How much have you made in a year? Do you have tax returns? Things of that nature for you to provide to this lender. Those three pillars are the things that you definitely need to get in order for you to make sure that you are ready to purchase the home. Now, there are investors that will say, oh, we just, we're getting another loan in order to qualify. We're getting a DSR, DSCR loans and things of that nature. And no, there's other requirements for that. But right now, this information is for the people who are purchasing a home to live. I see in the comments that they have cash. That falls into the place of, assets. Do you have assets? Which is why I said the three pillars are strong. Do you have asset? If you have asset and you're paying all cash, then you don't need to go through the mortgage process, which will need a credit, and they will need to make sure that you're employed for a certain amount of time. So if you're paying all cash, then the other two do not count because you can just pay all cash and you are, you're fine. You don't have to apply for a mortgage. This does not concern you. If you're paying all cash, you do not have to apply for a mortgage, so you can bypass all of those two things. But you do need the pillar of asset. You need assets to get a home. And if you're paying cash, the cash that you have is your asset. So these three pillars will be in place for no matter how you want to strategize your purchasing your home. However you want to strategize it, you will still need one of these three pillars in place. Sometimes you need both, sometimes you need all three, sometimes you need one. So once you have all that in place, the lender is going to give you a pre-approval. And then if you're applying for a mortgage, once you have those in place, make sure that your background is strong. The lender is going to give you a pre-approval of how much you qualify for. Now, again, if you're doing all cash, then that goes out the window because you don't need that pre-approval. You say, let's say you have all cash $250,000. Yeah, $250,000, that's all you have. That's all you have. That's what you can buy. We can't buy anything $300,000 unless the home is $300,000 and we can negotiate it down to $250,000, which is all you have. But whatever you have, that's how much you can buy. Now, if you have a pre-approval for $300,000 and you still want to buy a $250,000 house, you can. But the max you can purchase is a $300,000 home because that's how much you're pre-approved for on that pre-approval letter. So once you get that letter, you are aware of what you are able to purchase. You know the amount of house you can buy. So most people just get into the market, don't know what they can afford, and just start looking, and then they get into the lending process and they realize they really can't afford that home. That's not what they're qualifying for. Sometimes you also need to know how much you want to pay monthly. These are for the people that want to do mortgages and not the cash buyer, like the person that's in the comments with the cash. This does not have anything to do with you. But no, actually it does, because if you're buying in cash, you are still going to have to account for holding costs. You need to account for your holding costs, the electricity, the things like that you need to turn on. If you're flipping it, you still need to have holding costs, because until the home sells, you need to have all of those utilities and things like that, turned on. So you need to account for those as well. But for those of you who are purchasing a home with a mortgage, you need to know how much you're paying monthly, your PITI, okay, your principal, how much you borrowed and need to pay back, interest, the amount that you need to, basically the cost for borrowing money. How much am I going to give you for borrowing this money? That's the interest. And then we have taxes, your property taxes for the where the land is sitting, and then your insurance, homeowners insurance, just like how you have vehicle insurance, motorcycle insurance, boat insurance, you need homeowners insurance in case anything happens. That way you can be covered. So all of that you need to account for in your monthly payments, and you will be able to get the amount. So when you are looking for the home, you need to take that into consideration. How much are you comfortable with paying every month? How much are you comfortable with paying every month? And knowing that will give us a ballpark of what price range we need to be in when we start looking for the home. We need to we need to keep in mind of the price ranges that we need to be in, because we know, okay, we don't want to go over $2,000 a month. Evelyn, I don't want to pay more than $2,000 a month. That's including everything. What home do I need to purchase in order to stay in that range? And that's what I will come in and talk to the lender and say, hey, my client doesn't want to go over 2,000. So when you're looking into the pre-approval, let's keep that in mind, so we're not, giving them a crazy amount. And what range we need to be in for us to be in that ballpark of staying within $2,000 a month. So we will discuss that, and we will get that number in place, so that way when we're searching strategically. We're not just searching blind, because once you get the home under contract, you are under contract. That's a contract. That's a legally binding contract, meaning you are responsible of seeing that contract through. Now, there is due diligence and there are contingencies in place that can get you out of the contract. However, once you're in the contract, if it's not within the contingency, you can't just say, I don't feel like it, because once you do, you put in your earnest money to hold that home and pull that home off the market for a little bit until you secure your financing. If you change your mind and say, hey, I don't feel like, buying this home anymore because it's too expensive, and we're past the contingency period, then that's something that the seller can say, you paid me this earnest money of $2,000-3,000. I'm gonna keep this $2,000-3,000 because you're in default of the contract. And sometimes that can be, detriment to our advantage, because we're not thinking strategically in the beginning to let us know what we need. I built my home 2 years ago, and now it seems small to me. Yeah, things change because builders are building things differently now. You need to take in consideration of functionality. You need to think about the floor plan. You need to think about everything when you're actually building a home. Sometimes we just go for the aesthetic and we don't plan ahead. In the future, we think short term and not long term. And real estate is a long term thing, especially if you want to hold the asset for a while. It's a long term thing. So we have to make sure that, hey, if I'm going to stay in this home for 5 years, will this be functional? Things can change. Like I was saying in the beginning, we're going to the new year. A lot happens within a year. A lot happens. We meet people, our family grow, things like that. So a lot happened within the new year, and we need to make sure that we know what we're planning for when we are building the home. The bank keeps calling me, asking me to draw money from my equity. Annoying. What nice house can you find in a nice area around 2K a month? You could be surprised at what house you can find for 2K a month, especially here in Georgia. There are little pockets that you can be able to find those homes. That most definitely, you can be able to find a nice home for 2,000 a month. It just depends on the area. Now, if you want to be in a metropolitan area, that may be a little difficult. However, you can find some homes that are within that price range that you can pay 2,000 a month for. So it's just like you just have to be strategic. You just have to be strategic. But these are really good questions and really good scenarios that we are going towards right now. Okay. I am multitasking here, guys. I want to make sure that I keep my ear on the door so that if my appointment walks in, that I tend to them and not just hang up abruptly. So I'm gonna be here for maybe about 5 more minutes, and then we will wrap this up. But is there any more questions about the home buying process? I think I stopped at making sure that you are informed about the amount you want to pay every month, so that way you're not blindsided when you do get into the process and you've paid your earnest money, if you've paid money for your insurance, you've paid money for your appraisal, you've paid all these upfront money, and now you want to walk away, and these are things that you can lose if you decide to change your mind because you're afraid of what you see. Now, I will let the lender give you a good faith estimate, and a good faith estimate is just basically the document that lets you know how much you'll be paying based on everything that you've given, how much you'll be paying a month, so that way you're not blindsided when you get to the closing table on closing day and you see the amount that you are responsible to pay for this house, so that way what you are responsible for, and in the beginning, and moving forward, you're confident in what you're getting into. So a lot of people are not getting that type of service when they are working with a realtor, and they just get into the process, and then later on down the line, you're sitting at the closing table, you're ready to close on a house, and your lender sends you this closing document and tells you how much you need to pay every month, and you're shocked because you didn't expect it. That's because you weren't informed in the beginning. I understand a lot of people are getting that confused, and that's something that you need to make sure you are discussing with your agent. Okay, making sure that you have a good faith estimate in the beginning, so we know, okay, we're under contract for this home. How much will I be responsible for? All right, not just the glitz and glam. What am I about to decorate, and how do I see it here? Yes, you can think about that, but let's think about the finances too. Let's think about the finances too, because the finances are the most important thing. Because if you default on your loan and your mortgage, you're going to foreclosure, and we don't want that. So let's think about the finances in the beginning. Let's get that under control, and then we can get into the other parts and the aesthetic things and things like that, making it pretty and all of that. Okay. So make sure that is intact. Next, you're going through inspection. Inspection, you're going to see the property that you like, and we're going to hire a certified inspector who is able to inspect the home from top to bottom, making sure that you're not walking into a money pit, making sure that this home is in good shape. And if something is wrong, it's not too hazardous that you cannot handle. And if there's something that needs to be fixed, we need to express it to the seller that, hey, this needs to be fixed. If they're fixing it, cool. If they're not, we have the decision to walk away, or ask for some more money. If they're not giving anything, you can take it or you can leave it. But I advise you, I can't advise you right now on this live, but sometimes you need to leave it. Sometimes it may just not be for you. Sometimes you just need to say, you know what, I don't think this is for me. This is not a smart decision for me. I'm just going to walk away from it right now. So you got to make sure that you get somebody to inspect it. I do not let my clients go into a transaction without getting an inspection. I will not advise my client to not get an inspection. Absolutely not. Even if it's an investment home, I would not say, hey, go into this blindsided and not knowing what's wrong with the home. That's not what you're going to get from me. But next, after inspection, you are going to get an appraisal. Appraisal is basically you knowing the value of the house. How much is the house worth? Okay, how much is the house worth? What is the price of this home really? Not what this agent is posting and saying it is, not what the seller think it is based on what they did to it, but how much is it actually worth? You're going to get an appraiser who is going to walk in and look at everything that's been done, but also look at the market, the area, and all of the other homes around, and come up with a value of what the home is worth. And they're going to let you know, hey, you are under contract and trying to buy this home for $250, but based on my research, upon further review, this home is only worth $230. And the lender is only going to give you the amount of money that the home is actually worth. Now, if you're buying cash, that's a whole nother story. If you're buying cash, then lucky you, you can pay. Either you can pay the $250 and say, I want this home so bad, I'm willing to pay over, or I'm only going to pay you what the home is worth. 9 times out of 10, you're only going to pay what the home is worth. It says 2:51 arrival time. Lord. 9 times out of 10, you're only going to pay what the home is worth. And um, lost my train of thought. But the lender is only going to give you the amount of what the home is worth, and that is going to be what you pay for the home. And so what an appraisal is, it's going to tell you, are you walking into equity? If you bought the home at a discount, let's say the home is 250 and the appraiser says it's 260, then you've walked into a $10,000 equity, which is amazing. You know, you got the home at a discount. But now if it's 240, then you have to decide, hey, do I want to pay over for this home, which you're not going to because the lender's not going to, or do I want to walk away and go look for something else, or is the seller going to bring down the price a little bit? So we have to keep that in mind, and make sure that the appraisal process is done. But the lender will require an appraisal, and that is something that the lender does. After you get the appraisal, if everything checks off, you do a final walkthrough, making sure that all of the things that you asked the seller to fix has been fixed. Your finances checked off, everything checked off. So we are walking through the home to make sure that everything the seller said they were going to do, they did. Everything they said they were going to keep, they kept in the home. And you're going into the closing table. And when you go into the closing table, that's what you see usually on social media with the keys and the champagne, and those who don't drink the apple cider vinegar, the apple cider, or whatever the mocktails, whatever it is. You have a good time. You celebrate the process because it is a process, but it's a journey. It's one of the biggest purchases in your life, and it's worth celebrating. So when people ask me, hey, is this year a good time to buy? Is now a good time to buy? I always say, are you financially ready? Are you financially ready? Are all of your three pillars that I mentioned in the beginning, are they in place? Do you have all of the pillars in place, and are you financially ready? And if that's a yes, then yes, it's a good time to buy. It's a good time to buy because you just need someone who can strategically plan with you and making sure that the asset that you're purchasing is smart and it's the right one for you and it makes sense moving forward long term. So we have to make sure that we ask the questions that needs to be asked, but also take the actions that and the steps that we need to take in order to move forward. I normally move every 5 years, but my wife always becomes pregnant every 5 years, so I'm scared to move, but I need a space. That's interesting. That's interesting. I mean, I guess that means that you just need something bigger, and that means that you have to think long term when you do purchase a home. Let's say you purchase something that's a 3 bedroom, right? And or you're looking at something that's a 3 bedroom, and that's a thing that happens every time you purchase a house. So you need to move because of your family is expanding. Then instead of getting a 3, maybe you get a 4 or a 5. That way you're planning ahead for the unexpected, because life happens, things happen. So having that extra space can be helpful so that we are prepared when life does life and things happen in our life, and we don't have to abruptly move because we need bigger spaces and things like that. So I think I've ran through everything. I don't think I'm missing anything. Is there any other questions before we end this live? This was a great live, guys. This was a great live. Is there any questions? Is there any questions? Yes, I would say that's where let me read it for those that are not seeing the comments. Homes tend to have small bedrooms for single family homes. It depends on where you're looking. The closer you get to the metropolitan area, you're going to see that some of the homes are a bit smaller because, some just some builders are just trying to cut costs, and they're being greedy with the spaces and the land. But however, it is It's basically depending on your agent and what you're settling for. I understand sometimes we want to be in where all of the fun and the livelihood is. Other times we just need to kind of go out a little bit, go out a little bit and see what the other areas that are outside of the metropolitan areas have. And believe it or not, some homes are a lot bigger once you get out of the main city area. But the closer you get to the metropolitan area or like the main hub of that state, then the smaller you may get. And that's just something that I've been seeing lately, and it's true. You just need to find a pocket in the state that you feel like is close enough to get to everything, but not too close, and that way you're not risking space and things like that. So I'm in the DMV area. Thank you for subscribing. Thank you for subscribing. Thank you for subscribing. Yeah, I'm from the DMV area. I just moved to Georgia from the DMV, from Maryland, from PG County, Laurel, Maryland. All right, guys. This was nice. Thank you guys for spending time with me today. I'm going to be going live more often. That is my goal for 2026, to get live with you guys. Again, this page is solely real estate. All right. We are discussing all things real estate. I do have another page, Evelyn T. Williams, and that is all things life. I do behind the scenes. We do a lot of motivations. We do some entrepreneurial things like that. So if you want to get a little bit more in the nitty gritty and get some advice on other things, go and subscribe to that channel. But for this channel, we are all things real estate, market updates, homes, tours, and all of that good stuff. Okay. But thank you guys so much. Hanover. Oh, I was Lexa at Hanover. Laurel. So nice. But thank you guys so much for tuning in. Hope you guys have a fantastic day. Go be great. Talk to you guys later.